Today, we're going over the housing market. Has it crashed yet? What is going on? We are in some unusual times. So we're going to talk about what we're seeing on the housing market. We're going to talk about condos because condos are basically like the crypto of real estate. They look awesome and people are just getting flushed. So going right into it, this is what's happening right now. There's a massive amount of delisting happening. So sellers aren't desperate, but they seem to be in denial. So more homes were pulled off the market in May than were listed. That's not a cooling off, that's a freezing up. Delistings rose 47% year on year. More homes were delisted in May. Top metros affected: Phoenix, Houston, and Miami. These are three markets that we've been kind of talking about a lot on these episodes. Those are markets that are being impacted significantly. Now, here's the interesting part. Many sellers don't need to sell. They want to sell, and that creates a different environment. When you're forced to sell, you got to usually take a haircut. Like if somebody's not willing to give you what you want, but you have to sell, that's typically when you land into losses. That's not what we're seeing right now, but something interesting is happening. And I think it's the dynamic between real estate agents and sellers. And maybe a better way to say it is, sellers are typically out of touch with where the market's at. And you can make the argument that it's agents' job to get them to reality, but they actually have a very difficult time doing that because agents rely on getting the home as a listing before they've, well, maybe let me think of it. Let me say it this way. This is probably a better way to say it. A listing agent has the incentive to get the house as their listing. If they push back too hard in the beginning on a seller, if the price is out of whack, they fear losing the house. So they play this game of like, okay, what the seller thinks they can get, they can't get. But if I tell them that, will they go somewhere else? And it creates a moment like this. So usually what happens is sellers have an idea of what their house is worth based on what home sold for, let's say 6 months ago, let's say 12 months ago. And so when they go to find an agent to sell their house, they've got that number set in their mind. And if you don't get an agent that is or understands the long game and is willing to tell them you're not going to sell for that price, you run the risk of what we're seeing right now. So what's happening? Seller wants to sell a house for $1 million. Agent says, okay, we'll see what we can get, knowing that they're going to play the price reduction game. They don't tell the seller that. They just know that's in front of them. So they list the house at $1 million, no bites. They tell them we should put a reduction out. It's going to drive demand. That is not happening right now. And instead of continuing to do the price reduction, sellers are just opting to take the house off the market. What I want to leave you with, and this is actually solid business advice for anyone, I would always be willing to shoot it straight with somebody, even if that means losing the listing. Or if you have a service business and somebody wants to do business with you and you know what they're asking is unrealistic, shoot them straight. The reason why is if you are honest with people, what you're going to see on the back end is going to be threefold, right? So let's game this out. I'm an agent. Somebody comes to me and says, I want to sell my house for $1 million. I know that house isn't selling for more than $900,000. Most agents are going to say, yeah, let's sell it for $1 million. We'll do a couple price reductions. It's going to end up trading closer to the $900,000 that I know it's going to sell for. This way, I get the house, I get the fee once we sell, everybody's stoked. But that's not what's happening, right? So what I think is a better option is for an agent to say, hey, look, I know you want to sell for $1 million. And you're going to find an agent out there that will tell you to your face you can get $1 million for it. I'm telling you right now, you can't. I'm going to be honest with you. If that seller says, okay, I'm going to go find somebody else, and that exact situation happens, somebody tells them we could sell for $1 million, they can't, the seller's unwilling to do price reductions, and they pull the home off the market. Who are they going to call the next time they are ready to sell their house? They're going to call you. They're going to reach back out and go, you know what? You were totally honest with me. I should have listened. You have my business now. So I think it's really important for anyone in business to play the long game, even if it means you might lose a potential sale right now. Now, the dynamic is real estate's hard to sell right now. And so you're going to feel the pressure of having to get deals because you got to pay bills. And if you don't have deals and you're not making your money and you can't pay your bills, you're going to feel the concern come out. And that is typically when you see people give on their discipline. I think this is a very important time not to do that. One thing for me that, I'm actually wondering if I should even tell this story. I'm going to tell it. So when I sold my last house, the first thing I did was look at what the numbers were going to be if I didn't sell. If I turned it into a rental, how much could I rent it out for? What was going to be my net cash flow? And what was going to be my overall return or cash return considering the money I had in my house, the equity? And when I originally did that, I think I was going to make like 2.5% cash flow, 3% cash flow. And so I decided, you know what, it would be better for me to sell it, walk away with a big chunk of money because I can get 3% almost anywhere. Right now, you can get it in a high yield savings account. So I chose to sell. Now, I sold in 2019. This is before the market went nuclear. And the listing agent actually did what I told you to do. They said I couldn't get what I wanted to get, right? How much did I sell my house for? I sold it for $750, I believe. And they told me I could get $7. I was like, no way. We're getting $750. I pushed the broker the way I'm telling you sellers shouldn't. In this case, I was right. But we ended up selling for more than the broker thought. But the only caveat to that, I'm in real estate. Like I do real estate every single day of my life because it's my profession. I feel like I had a better sense of what was actually going on than the person that just owns a home, is not in real estate, and then decides to sell. I don't know if that story is going to help or not. It worked out for me. Wow, that's a contradiction. All right. Here's another reason why sales are extremely hard right now for those that just own a home trying to sell. Is because of all the new build. So builders are destroying the housing market for us that own 10-year-old homes that are trying to sell. And this is why. Builders are offering a 4% teaser rate right now, while you're trying to sell your house knowing rates are at 7%. You're not able to be competitive right now. And this is why. One, when builders are building and then selling, they're doing so at scale. They're not just selling their one house that they've owned for 20 years. They've built 10, 20, in a lot of cases, hundreds of homes that they're offloading. And because of that, they have tools that they can use that the individual homeowner just doesn't have. And this is what they're doing. They're offering teaser rates, buy downs, and incentives to sell their house where on paper it doesn't look like they're doing a price reduction, but they actually are. And this is what's going on. Builders in markets like Phoenix, Dallas, and Orlando, Houston as well, there's a ton of new inventory. These are markets that are easy to build. We saw a build boom happen from 20 to 22, and right now they're selling them. The things they're doing, a mortgage rate buy down, it's basically the builder paying the lender up front to reduce points. And so they're able to sell it to the buyer at a discounted rate. Sometimes that rate is only for a year or two. In some cases, they're able to do it for the entirety of the loan. So what that looks like, if current market rate right now is, let's say, 7%, a builder will buy it down, meaning giving money to the lender to get it down to 4%, even if it's just for the first year, and then they're selling that to the buyer. So the buyer's coming in and going, okay, I'm not paying a reduction in the price, but my monthly payment is reduced to where I can afford it. The individual homeowner is not able to do that. So that's one thing that is really helping for builders. Teaser rates. So teaser rates are like, it's similar to a buy down. It's more like an ARM. So they might have a loan where for the first 2 years, it's at 4%, and then it adjusts. And then when it adjusts, they're basically making the claim that interest rates 2 years from now are going to be lower than they are today. So that's another tool that they're using to get buyers in. Another one, here's kind of some of the wild tactics with the incentives. They're covering closing costs. So builders might be paying 10 to 15K in escrow and title fees. Sometimes they're doing designer credits, so 5 to 20K to customize your floorings, your countertops, etc. Sometimes they're offering free appliance packages or some smart home upgrades in it, or sometimes there's some extended warranties. Now, on the arm, this is what I want everybody to be careful with. This is what got us all in trouble in 2007. So everybody was doing adjustable rate mortgages. And so they'd come in at 6%. Interest rates went through the roof, and all of a sudden you couldn't pay or afford your mortgage once rates went up. Now, we are in an environment where I think the higher probability is that rates go down, but it doesn't mean they have to. And you need to calculate that when you're doing this. Why resale homes can't keep up? A lot of it is what we just went over is the incentive, but the big one right here is understanding the reality of the market. If you don't know what the market actually trades for, you don't know where to truly price your home, that usually takes time to work out. I would say we're in about a year of sellers having an unrealistic expectation of where homes can trade for. That's a long time. Usually what you see after a year is sellers getting back to reality. I think the main reason why they're not, it's because they don't have to sell. The forced sale issue is what's holding this up. So this is what I would recommend for anybody wanting to sell but not needing to sell. Don't sell your house. Look at moving it into a rental. This is something that people are missing. Yes, if you sell your house and you make a bunch of money, great. But right now, you have an extremely low interest rate that I'm not totally sold that we're ever going to see it that low again. I think a sub 2%, 30-year fixed, I think that's a once-in-a-lifetime scenario. If that's the case, hang on to that loan. Don't ever sell it. And considering so many people have a large amount of equity in their house, I would be looking at moving these homes into rentals right now. I would look at a HELOC or pulling money out that you could use to buy another home, move into that home, and then move your current primary into a rental. I'd almost make the case that there might be an argument right now to even get out of your house and go into a rental, move out of owning, keep it, move it into a rental property, and then rent your primary home. I think that might be a case where you can make way more money in that scenario than just sitting on your house. And the reason being, rents versus mortgage are wildly off right now. I just went through this example last week because my wife looked at a home, sent me the listing, and it always comes with the projected mortgage, right? So she sent me a house. It was $1.5 million, and the expected mortgage on that was $8,500. You could rent that same house right now for like $4,000 a month. And so it makes more sense, I think, to rent that same house at $4,000, move your primary into a rental, get some cash flow, get some tax deductions, and I think that's a win-win scenario. So I don't think enough people are looking at that right now. Here's a big one. Condos are collapsing. If you own a condo right now, this is a tough one. Right now, condo prices are down 2.2% year over year. Sales are down 12%. The markets that are getting hit the hardest are Florida. Florida's getting just absolutely smoked right now. Deltona's down 32%. Crestview's down 32%. Tampa, Naples, and Orlando are also down significantly. Why? The two major factors are rising HOA fees and insurance premiums. So these are fees that you can't control that can throw off your whole calculation on what you can afford every month. Why that's happening? Well, in Florida, there's the post-Surfside regulation, which means there's mandatory costly inspections. And then many buildings no longer qualify for FHA loan programs. So the FHA program is a great first-time home buying program where you only have to put down 3.5%. A lot of condos don't apply for that, so the financing options aren't as good. The other one where we're seeing this right now is in California. So California buildings raise their dues by 30 to 50% to meet the new reserve laws. And what happened in the reserve laws, it requires HOAs for condo buildings with 3 or more units to conduct visual structural inspections every 9 years to ensure adequate reserves for future repairs. So if you're in a condo and the HOA reserves are underfunded, your dues are going through the roof. You're going to get hit significantly, especially if you're in an older building. And here's where the challenge lies. If you're a first-time home buyer, you're usually not buying a brand new condo, especially in a market like California. It's just too expensive. So your only option is buying an older one, and you run the risk of massive costs driving up to the point where you can't afford it. The other thing about condos are volatile investments. When I was starting Commune, I knew I wanted to create an investment firm for real estate. And I knew multifamily apartments was kind of my number one, but I was looking at all of them. Should I invest in single family? Should you invest in condos? Should we do commercial, industrial, storage? The main reason why I landed on multifamily was 2 reasons. One, I think scaling multifamily is way easier because I could go out and buy a 100-unit apartment, and I thought that was much easier than buying 100 single-family homes. But the thing that I was wrestling with is I knew home ownership was starting to run away from the American dream. And I knew that most people used homes as their number one wealth build move. And so I knew there was demand. Condos, actually, there's such a strong argument that because condos are cheaper than homes, and if affordability is becoming an issue, that's a great asset to own. The HOA, though, is gnarly. And so I stayed away from it because during downturns, knowing that HOAs can climb and you're running a political dynamic there, you run the risk of just majorly getting smoked. So I stayed away from it for those 2 reasons. Now, here's some strategies right now that I think are important for investors to know. The smartest people in real estate right now, they're not selling. I would say they're repositioning. And you are seeing that even on the individual home seller that we talked about in the beginning. They're pulling their home off the market. So they're not selling because they don't have to, but they're missing out the repositioning. That's what we talked about earlier. Look at repositioning your primary into a rental. I think that's a really smart thing to do. For buyers, I would be focusing right now on oversupplied metros. So if you're looking at California, I think it's going to be difficult for you to find something that makes sense because the market's undersupplied. If you're looking at areas like Phoenix, Houston, and Tampa, you're seeing massive price reductions there. That's probably a great way to get into the market at a discount. Last one, and this one's going to depend on where you live. But I'm going to say this to people wanting to get into real estate that have never owned real estate before. This is kind of for the young generation, Gen Z and millennial. The housing market will not always be like this. So you're coming into a market that felt similar to when I entered in 2005. Prices were through the roof. It was so expensive to buy a house. The only difference really in 2005 to today is the lenders were giving out loans to people that they shouldn't have given loans to. So you could qualify at least. We just saw the spank happen in 2007 where no one could afford it, and then the fire sale began and the market crashed. But the market re-corrected. And then when you got into your 2009, 10, and 11, all of a sudden it was a buyer's frenzy. We will get into that scenario again. Real estate will not stay inflated forever. Real estate works with cycles. There's highs and there's lows. We have been in a high for quite some time. Now, I think a lot of that is because we watched the real estate market inflate because of bad policy through COVID, matched with a 10-year run of leadership, I think, falling short and not incentivizing building to happen to keep up with population growth. So population growth didn't keep up with supply. That drove prices up. The way we printed money, which created inflation, drove prices through the roof. And we're experiencing that right now where the expectation of interest rates was potentially short-lived. So I think sellers went, okay, interest rates are high, no one can afford it, but it's only going to be for 2 months. And then once rates come down, we'll be fine again. Prices will go back up and we can just wait this out. I don't think that's actually what's going to happen. And I heard somebody articulate this opinion. I think there's a high probability of this happening. So what typically happens, actually, I'm going to make a pretty bold claim right here and say, the housing market is broken, and this is why. Usually what happens is when rates go down, prices go up, and when rates go up, prices come down. That's typically what happens because when you're buying real estate, you're basing it off of what you can afford per month. And if rates go up and prices go with it, nobody can afford anything. So when rates come down and prices go up, you can still afford your monthly payment even at a higher price, right? So that's how it typically works. Think about what happened in 22 to 23. Interest rates went up, home prices went with it. That is not normal. I think when interest rates come down, everybody's telling you that home prices are going to go up. I think they actually will come down as well. I think we're going to see the back end of what we just experienced in 22, but in the inverse. And so if you're expecting home prices to go up when interest rates come down, just know that there is a chance that does not happen. And if I'm right, we might see a correction. We might see home prices all of a sudden fall because we might see a mass amount of homes hit the market. So all that to say, just prepare as much as you can for that happening. Have money ready. If it doesn't happen, okay, we might have to reassess. If it does, it may be a great time to buy. All right, I'm going to keep you guys all updated next week on what's going on with real estate. Stay focused. Stick to your goals. It will get better. If you want to own a home, just keep driving forward to home ownership. You will eventually get there. It just might get delayed. We might see a correction and be high-fiving again. We will see. Thank you for spending the 30 minutes with me. If you're not subscribed to the channel, please subscribe. And anyone who's trying to sell a house where their expectations are unrealistic, send this interview to them. Let's get sellers back to reality. It's going to make for a much healthier housing market.